Good morning. How are we doing today? Now, today we're going to discuss chapter 2. But before I go to chapter 2, last week we talked about chapter 1. On Tuesday, we had a short discussion or question and answer session on chapter 1. Any further question on chapter 1? Any clarifications? Now, I am going to make some of these videos available on YouTube also. I'm in the process of setting it up. So for some reason you missed me here, you could go on YouTube and just play the video. The video will be the actual class that I'm conducting right now. How's the weather in New York?
It's pretty cold. Yeah.
Cold? What's the
It
temperature?
snowed in my area yesterday, but it's not like bad.
Okay, I think we are gonna have 82 degrees today. Right now it's about 75 out here. Beautiful. Anyway, let me share my screen with you. No questions? So we're gonna talk about chapter 2. And here's my chapter 2 outline. Let me go back to the beginning. By the way, the best way for you to approach this is when I'm lecturing, if you can, get your textbook near to you. And you could follow me on all these outline slides that I'm lecturing on is in the course. Okay. So if I go to my course, let me see, where is my course? Here, chapter 2, and I click on chapter 2 outline, and you could follow me. That's what I'm lecturing from. And as I'm lecturing, I have my textbook next to me in case I need to reference some pages for you guys, okay? So you could do the same thing and follow me and make your notations in your textbook. If you want to print the lecture slides, then you could make your write on the lecture slides. They're not too much notes that you should be taking. Don't try to recreate the book. Don't try to write everything I say. It's going to always be there on video for you to reference. At least once you should look at the video while you're reading your text and make your notation. After that, you could be on the train and be playing the video on your phone or something, okay? But it will always be there for you. So chapter 2, we're gonna talk about the CPA profession. What is the CPA profession? What it is about? What are some of the governing bodies in the profession? And how should we conduct ourselves as CPAs? What are some of the rules and regulations that governs the profession? So these are the things we're going to talk about, but we're going to put it in some fancier language. Okay? So when we talk about the CPA profession, just like any other profession, what is the profession like? Last week, we talked about what it entails becoming a CPA. You have to pass the exam. In New York State, you have to pass the exam. You have to have 150 hours of credit. And you have to have some experience to become a CPA. And in most states, it's very similar. The education requirements may vary from 120 credits to 150 credits to a master's degree. Some states may not say they require a master's degree, but when you look at their curriculum, it is basically the equivalent of a master's degree. So in today's environment, if you're going to be a CPA, it is expected that you get some specialized knowledge at the graduate level. And I'm not trying to sell you something that I didn't subscribe to myself. When I was a student and I graduated, I sat for the CPA exam and I became a CPA. And then I was looking to move to Florida. And Florida basically requirement was the equivalent of a master's degree. So I enrolled in Brooklyn College and did my master's degree. Upon graduation, I was offered a teaching position at York and was offered some consulting position in Wall Street area. And life was good in New York for me. So I didn't move in 1991 when I should. I moved a number of years later in 2013. Sorry, 2003, 13. So, like myself, doing a master's degree opened up a whole array of career opportunities for me. And that's why I think as a aspiring CPA, you should think in that direction. Now, the CPA profession, what are some of the things we're going to talk about? We're going to describe the nature of CPA firms, and we're going to talk about what they do. As accountants aspiring to become CPA, we all should have an interest in that. We'll describe the structure of CPA firm. We'll understand the role of the Public Company Accounting Oversight Board and the effects of the Sarbanes-Oxley Act on the CPA profession. We'll talk about how this come about and why. We'll summarize the role of the Security and Exchange Commission in accounting and auditing. Most people are familiar with the IRS because we all have to file our tax return and pay taxes. Like the IRS, which is an arm of the federal government that oversees the taxation system, the Securities and Exchange Commission is also an arm of the federal government that oversees public companies. So every single public company in the United States of America have to report to the Securities and Exchange Commission. We'll describe the key functions performed by the AICPA. The AICPA is a membership organization where all of its members are basically CPAs. There may be also some rooms for student membership. We'll understand the role of the international auditing standards and their relations to US auditing standards. We'll use US auditing standards as a basis for further study. We'll identify quality control standards and practice within the accounting profession. Quality control standards are standards set by firms themselves. Think of it. Let's think of a restaurant business. If you have a restaurant business, what are some of your quality control standards going to be? One, you want to make sure your food tastes good, right? Two, you want to make sure the atmosphere is inviting, which is the ambiance. And three, you want to make sure that your service to your customer are good. Because if customer like your service, they're going to come back. And most restaurants, if it have those three things, they do reasonably well, if not excellent. So likewise, we are going to look at quality control standards that CPA firms set for themselves. Unlike a restaurant that produces tangible goods, which is the food, CPA and CPA firms provide an intangible service. So there's a little difference in how we measure, how we evaluate, how we categorize it as good quality or bad qualities. So let's dive in. The nature of CPA firms and what they do. Today you have the big four CPA firms, which is the largest four accounting firms in the world. In my days, they were the big four, the big eight, and through mergers and acquisition, we end up with the big four. And the largest CPA firm in the world are international, And they have offices in every major city in the world. So who are these guys? Number one is Deloitte. In the old days, it used to be Deloitte and Touche. Deloitte is the largest accounting firm in the world as categorized by its revenue and its professional staff. Sitting at number two is PricewaterhouseCoopers. PricewaterhouseCoopers used to be two accounting firms in my days. There used to be Price Waterhouse and there used to be Coopers and Lybrand. The two of them merged to form Price Waterhouse Cooper. And they sit at number two with revenues of 11 million, I think this is it, 11,724,000,000. At number three, we have Ernst & Young. And at number four, we have KPMG. KPMG is also a merger of a number of firms. These are the four giants accounting firms in the CPA industry. And if you're looking to be a CPA, it's a great place to get a job in one of these four accounting firms for several reasons. One, the pay is generally better. Two, the benefits are generally better. Three, if you got 2 years of experience in one of these firms, nobody question it. Okay? And it could propel your career by having a couple of years experience in these firms. Now, there are some downsides for working in these firms. One is they control you. Once you work for them, they basically control you. And there may be some traveling involved. There may be a lot of mandatory overtime that's involved. And you must be able to adapt to them. In addition to the big four, you got some national or regional firms. Number five, RSM McGladrey. Number six, Grant Thornton. Number seven, BDO Seidman. Number eight, Crowe Horwath. Number nine, CBIZ. Number 10, Clifton Larson and Allen. These are also lucrative accounting firms to work for. And some of them are similar to the big four in what they require of you. I know my nephew used to work for RSM McGladrey upon graduation from Baruch College, and they had a mandatory 70 hours a week during busy season. Now, don't make that scare you. It is worth putting in 70 hours a week for 2 years, especially if you're single and do not have a whole lot of responsibility. On the other hand, if you're a single mother or something like that, or you're married, it could lead to some problem if your other half, doesn't coordinate with you appropriately. But after the 2 years you come out of there, any one of these 10 firms, there will be a lot of opportunities available to you. Now, what may be the disadvantage to working with these firms besides the demand on your time? Well, sometimes you could work in these firms and you could be placed in one area and be there for 2 years. When I was in public accounting as a junior accountant, and we were studying for the CPA exam, one of my fellow students was working for one of the big 8 firms then, and he was in bank rec for 2 years. I was in a medium-sized firm with about 60 personnel, and I was there about 6 months plus, and I was already running audits. I was seeing some audits, some taxes, etc., etc. So, yes, the big firms may give you may show good on your resume, but sometimes the smaller firm will give you a higher quality of experience. In the big firm, you may go into one area and be in that area. I got a nephew who was working for KPMG, and he recently switched job to somebody else. I forgot who he told me. And he was in one area. Right? So sometimes, if you want a more diversified experience, you go with a smaller firm. In addition to these top 10 accounting firms, there are some local or regional firms. A local firm, you may have a firm that is probably just catered to Queens or New York City or New York State or the tri-state area or the Southeast United States or the Northeast United States. These are all regional firms. If it's just catered to Queens, it's a local firm. What does CPA firms do? When you ask someone, what does an accountant do? Everybody comes to mind, taxes. And everybody thinks that accountants are busy at this time of the year, going on to April 15th. 90% or more of the people you're going to talk to out there does not really understand what an accountant do. They all think you do taxes and that's all you do. No, taxes is only one part of what we do as an accountant. You could be an accountant and may not even do taxes. A big part, a big part of what we do as accountants is audit and assurance services, what this course deals with. Now, if I go back to my previous slides on CPA firm, did they give us percentage, the last column, percentage of revenue from accounting and auditing, taxes and management services? You'll see Deloitte got 29% of its revenue from accounting and auditing, 18% from taxes, and 53% from management consulting. If you look at PwC, they're a little different structure. 41% come from accounting and auditing. 28% come from taxes, and 31% come from management advisory services. So the bigger firms spend a larger portion of their revenue coming from accounting and auditing services. If you look at BDO Seidman, number 7, 58% of their revenue come from accounting and auditing. So accounting and auditing is a major sector where most accountants and CPA work, but few people in the public are aware of that. CPA firms also provide accounting and bookkeeping services, tax services, and management consulting. When we look at that previous graph, not graph, but table, Deloitte, 53% of their revenue come from management consulting. So management consulting is also a huge area. So you see, taxes is about 1/3 or less of what we do. Although the Sarbanes-Oxley Act and the SEC restrict monitor from providing many consulting services, we'll talk about that. What are some of the SEC acts? What is the Sarbanes-Oxley Act, and what they provide for accountants and auditors? So the restrictions on the services we could provide to audit clients. Audit firms are not restricted from providing consulting to private companies and public companies that are not audit clients. So That's CPA firms and what they do. How are CPA firms structured? In my days, when we were, I'm when I say my days, I'm talking about when I entered the profession, majority of CPA firms were partnerships, especially the large ones. And then somewhere in the 90s, they came about with limited liability companies, LLCs and LLPs. And the majority of CPA firms convert to LLCs and LLPs. So, what are the structure of CPA firms? The structure of CPA firms are generally governed in the state where they operate. There are three main factors that affect the structure of CPA firms. One is the need for independence on client, especially if a lot what you're doing is auditing, you need to be independent. And we're going to talk about independence later. Two, the importance of structure to encourage competence. As an accountant, in anything that you do, you want to be competent in what you're doing. If you're a student, you want to be competent in what you're doing as a student in your studies. Three, the increased litigation risk faced by auditors. We'll talk about that in one chapter where we focus on accountants' liabilities. Organization structure. The organization structures of CPA firms are governed by the state where you operate. First, we have proprietorship, or what we call sole proprietorship. And by studying accounting 101 and 102, you understand that sole proprietorship has several disadvantages. If I operate as a sole proprietor, my capital may be limited to what I have, but I could invest in my business. If I die or become disabled, my business ceases to operate. And also as a sole proprietor, you have unlimited liability. If you operate as a general partnership, then you will have liabilities for your partners in addition to your liabilities. You can be bound by the act performed by your partners. So in the old days, CPA firms used to operate a lot as general partnership. Now they switch from that to limited liability companies or limited liability partnership. General cooperation, not a lot of states allow general cooperation, but few states do, and some of them may operate as general cooperation. A lot of them operate as professional corporations, PC. Whenever you see PC behind the name of a company, it's a professional corporation. And the most popular form of organization for most companies today are limited liability companies and limited liabilities partnership, whereby your liability is limited to what you invest in the company, basically. When you graduate from college and you're going to be looking for a job in a CPA firm, you're going to be looking for a job as a staff assistant. A staff assistant in the old days, in my days, we used to call that position a junior accountant. So you see that position, junior accountant, it's the same as staff assistant. And the staff assistant perform most of the detailed audit work. Sometimes as a staff assistant, your work could get tedious and boring. So you don't want to stay there too long, you want to move up. You want to move up because you're getting more responsibilities, you're making more money, but also you're doing more interesting work. And generally, you spend 0 to 2 years as a staff assistant. Some firms you may even spend longer. But once you move out of a staff assistant, you got promoted to senior or in charge auditor. Some of the bigger firms may have semi-senior or junior or year one senior, year two, year three, etc., or supervising senior, so they may break that position up into several categories. And generally, you're there in 2 to 5 years. When you're senior, you're basically running your audit. You're having a staff with you, a staff of junior auditors that you direct what to do. You are doing most of on the field work at the client premise. And then you will report to a manager or a partner. Most accountants, once they reach the senior level, they leave the CPA firm. Majority of them exit the CPA firm, probably something like 75%. Why is that so? I told you in the large CPA firms, the requirements might be several hours. You always have a lot of deadlines, whether it's audit deadlines, SEC filing deadlines, or tax deadlines. So you have a lot of deadlines to meet. So in the CPA firm, the work is a lot more rigorous. At this stage in their career, most accountants become CPAs and they move to a private company as an assistant controller, a controller, or a chief financial officer. They make a lot more money. They make a lot more money in the private company. They get a lot more fringe benefits. The work is not that rigorous. The time constraints are not that demanding. Let me share with you my personal experience. When I graduated, I went to work for a medium-sized CPA firm. 6 months while being at that firm, I got assigned to an audit in Brooklyn. And the senior who is in charge of that audit got pulled away from the job to go to another more important client. The client we are auditing were looking to go public. So the partner came out and asked me if he should send someone. And I said, no, I think I can manage this. And I ran the job. As soon as that job is done, which is about 3 months after, I became a senior accountant. And I start running jobs for that partner because he knew I'm capable of running it all. So you're moving up always at 0 to 2 years. In less than a year, I was a senior accountant. Now, when I started at the firm, this is back in 1985, my starting salary was $18,200. Now, in today's salary, that's about $75,000. When I left the firm, I was making about $24,000 plus. A year and 3 months with the firm, I got a job as a controller. And I moved, and I was making 40,000 plus. Today, 40,000 plus doesn't sound like a lot. In those days, 40,000 plus today is over $100,000 a year. See? So that's the upward mobility. In less than 2 years, I moved my salary. I more than doubled my salary. So think if today you go into a CPA firm, you're making $60,000, $70,000, and in 2 years you could be at $120,000, $140,000 if you work hard and move your way up. So that's why a lot of accountants like to go to the CPA firm, spend it 2 years, and then they move on. I didn't even spend 2 years. Now, after I spent 9 months at the client and I got my CPA firm, my CPA exam results, and I passed the CPA exam, I came back at the CPA firm as a consultant, part-time consultant in taxes, and eventually come back as a full-time manager in charge. Right? Now, this is not unique to me. There's a lot of good accountants that moved on. I had another friend who graduated from Baruch, and he moved similarly to me. Now, in addition to that, remember, I had no big firm experience, but I had a small firm experience. My experience was very diversified. Big eight CPA firms were after me to offer me position. In the early 1990s, one of the big eight firms approached me and they were offering me 200,000 plus. This is back in the 90s, okay, to run their audit department. And I turned it down because I had other things that I wanted to do. I want to teach at your college. I want to establish my own CPA practice. I want to be very independent. I did not want to be controlled. Okay. Now, other people may not have turned it down, may have seen it as an opportunity. I mean, imagine if I had gone into one of these big accounting firms and run their entire audit department for 5 years. I could have been anywhere in the world doing consulting today. Do I ever look back at that as a drawback? No, that wasn't what I wanted. I knew what I wanted and I go after it. Likewise, when you get out of your college and you go into the accounting profession, your first year on the job, and I know a lot of students will come and ask Professor Barrosi, what is the best area in accounting to get into? No, that's not the question to ask. You should ask yourself the question, which area is more appealing to you? Okay. Which area of accounting is more appealing to you? I want to be a generalist. Had I took that job, I would have been more specialized in auditing. And that's all I would have done for my career. What I would enjoy? Probably, but I enjoyed what I do today. I enjoy teaching at your college. I mean, for 17 years, I've been traveling back and forth. Somebody want to say hello. Let me get her. Hold on. Say hello. This is my little granddaughter, 1 year and 4 months old.
Hello.
Hello,
Hi, Judy. Hi.
don't be shy. Say hello. Don't cover your face. Say hello. This is the love of my life.
That's too much pressure for her.
This is my only granddaughter. So she come and knock at my office. She wants to come in. Okay, you go back to Mama. Hmm? Say hello. Okay, say bye. Say bye. Blow them a kiss. Get baby. Go back to Mama. Every day I'm lecturing, she comes and knock on my door. She wants to come in. Anyway, back to where we were. These are the little pleasures of life. When you get to my stage of life, those are the things that excite you. So, a senior from 2 to 5 years, that varied depending on how fast you could move up. Manager, I made manager in about less than 3 years. Partner, the partner I was working with offered me partnership. I wasn't even 5 years in the profession. And I said, I had to turn him down. He was a real nice guy. He taught me a lot. He was my mentor. But I had to turn him down because I wanted to do something different. Now, I'm not saying that all of you want to do something different. Some of you may take it as an opportunity. Being a partner with him would have been an opportunity. He had a practice then about $500,000. In today's dollar worth, that would be over $2 million practice, which I would have inherited had I been a partner with him because he was near to retirement. And I would have owned a $2 million practice or maybe more. Right? Now, why I'm sharing all this with you? I'm sharing all this with you because when you go out into the world, when you left your college and you move on into the world, don't chase the money. Don't look at the money. I want to make X amount of money. No, you want to be happy. Okay. Every day of my life, I can smile because I'm happy. I got a wonderful family. I got a wonderful job. I got an extremely wonderful business. I cannot ask for anything more. Okay. If you start putting, but I want to make so much and I want to make, guess what? You're going to be like some of my friends. And as I'm talking to you, I could name about half a dozen of my friends off the top of my head that are doing extremely well in their career, but the other side of their life is not together. You're doing extremely well in their career. You don't want to be that person. You want to be a well-rounded person. What do I mean by that? There are three things you want to get in your life. Okay? You want to have a career. You want to have a good career. But more important, you want to have a good family. Whatever you call your family, whatever your surrounding is, have good relationship with your family. Try to develop and cultivate loving relationships. Have good relationship with your friends. Same. Try to develop and cultivate loving relationship. Try to enjoy being with those people that you're being with. And if you cannot enjoy being with someone, that should not be a relationship that you want to continue. And the third part is your community. However, and whatever you define your community as being, you want to be helpful in your community. Don't look at what your community could do for you. Look at what you could do for them. Okay? And if you help your community, you're going to help yourself. Okay? If you always look to help people around you, guess what? You're helping yourself. Think of this. I'm a professor. I'm teaching you guys. If I help you guys to be successful accountants, and you all go on to be doing extremely well, have a good family, have a lot of friends, have a good community, and they're making a lot of money, I am going to be much better off because I contribute to that. I contribute to that. If I stay with my business and I help my clients, my small clients, if I help them to grow and become bigger clients, my firm is growing. Because if they are bigger clients and they're doing extremely well, what will happen to the accounting fees? It will go up. And this is how you grow your business. Okay? Always look to grow yourself, your business, or whatever you're doing by helping people become better. Because if you help people become better, that's a value that nobody can take from you. I like to think that everybody who touches my life in whatever shape or form, or who I touch their life, that I made a positive contribution to their life in some way, shape, or form. It is important that sometimes we think of ourselves as the person and not just the career that we are chasing. And please do not just chase your career and forget about your family, forget about your friends, forget about your community, because you're going to be like some of my friends. They're out there and they're my age. I'm 59 and they're pretty lonely. Okay. And when we get together, they say, "Bo, you got it made." No, I didn't get it made. I made it. Okay. I made it. And some of them probably making much more money than me. Okay. So not like these guys are financial failures. No, they're doing pretty well financially, but that's the only thing they get going for them. I don't want that to be you. I want you to be a well-rounded person, because the main reason we're doing certain things in life is to make us happy. So do the things that will make you happy. Chase your passion, whatever they may be. And not everybody going to want to become a CPA. No, some people have no intention of becoming a CPA. Does it mean they're not successful? No, they're just as successful as the other guy, as long as they achieve their goals. The role of the Public Company Oversight Board and the effects of the Sarbanes-Oxley Act on the CPA profession. Now, years ago when we were studying accounting, there were no Public Company Oversight Board. The professional standards were basically set by the AICPA. Then go back about somewhere around 2010, when WorldCom and Enron and so on went out of business, the public was asking the accounting profession, what you guys are doing? You're giving an opinion on these financial statements, the company's going out of business. So the SEC created the Public Company Oversight Board. Every public company has to belong to that Public Company Oversight Board. And that Public Company Oversight Board regulates the accounting profession as applicable to public companies. Now, a lot of the standards that the Public Company Oversight Board adopted are the AICPA auditing standards. And then they add some to it. So we're going to talk about two sets of standards here, in actually three sets, but they're very, very tied together. There's the Public Company Oversight Board standards, there are the AICPA auditing standards, and then there are the international standards. You don't have to know all of them. We're not going to spend a lot of time on the international standards. We'll spend more time on the AICPA auditing standards towards the end of the chapter. So, the Sarbanes-Oxley Act and the Public Accounting Oversight Board. The Sarbanes-Oxley Act established the Public Accounting Oversight Board. I think that was somewhere around 2010 or thereabout. I can't remember the exact year. And the PCAOB provide oversight for auditors of public companies, including establishing auditing, attestation, and quality control standards for public company audits, performing inspection of audit engagements and quality controls. So, who is the Security and Exchange Commission? As I said earlier, the Securities and Exchange Commission is an arm of the federal government. So the PCAOB came about because of the SEC, Security and Exchange Commission. For those of you who study business or study business law, you probably talked about the SEC, the Securities and Exchange Commission. And there are four things, or four rules that the SEC came about with that are important to us as accountants. And we will talk about them over and over again in the early part of this course. Back in 1933, or before 1933, anybody could sell securities. And there used to be widespread fraud in the sale of securities. Someone will sell you some securities that belong to some company, and the company doesn't exist. So the Securities and Exchange Commission was created, and the first rule they came about with is the Securities Act of 1933. And the Securities Act of 1933 require that any company that wants to sell their securities to the public must register with the SEC. Now, what registration entails? Registration entails they must submit audited financial statement. Depending on the company, it can be from 2 to 5 years of audited financial statement. Now, think what this do to the accounting profession. Think of all the public companies out there that were not having, before 33, didn't need to have audited financials. Now they all need audited financials. So there become a huge demand for CPAs going back to 1933. The Securities and Exchange Commission is a big creator of jobs for accountants, just like the IRS, or even more better than the IRS. They create a lot more meaningful jobs. So the Security and Exchange Act of 1933 required most companies planning to issue new securities to the public to submit a registration statement for the SEC approval. Now, the Security Act of 1933 governs companies that are going public for the first time. So the companies are going public in 33 and they registered the SEC. What happened after that? Do they stop providing financial information? No. The Securities and Exchange Commission in 1934 came out with the Securities and Exchange Act of 1934. And the Securities and Exchange Act of 1934 required that every public company must file an annual report with the SEC. That annual report is called Form 10Q. Included in that annual report should be audited financial statements. The Securities and Exchange Act of 1933 also requires every public company to file a quarterly report with the SEC, Form 10Q. Included in the Form 10Q must be financial statement. The financial statement need not be audited. They could be compiled financial statement or some other form, which we'll talk about later. So think of what these two acts did to the accounting profession. Not only companies who are becoming public need to get financial information done, but every public company every year must have an annual audit. So there the accounting profession took off. And we've been in about the top 5 or top 10 ever since until today. So the accounting profession is a wonderful profession to be in because no decent accountant are out of an accounting job for too long. The Securities and Exchange Commission. The 33 Act require a Form S1. There may be other forms depending on the size of the offering. This is not a course that specializes in SEC accounting, but if you're doing a master's degree in accounting, you may have a course that just specializes in SEC accounting and talk about all the registration statements that you may have to do. They require you to file Form 8K to report significant effect of events of interest to investors. A change of auditor or a change of accountant is a significant event. They require Form 10K, which is the annual report that contains annual financial statement, and Form 10Q, which is the quarterly report that contains quarterly financial statement. The AICPA, the American Institute of Certified Public Accountant. The AICPA is a membership organization that is made up of CPAs. So every member of the AICPA have a CPA license. The only member that may not have a CPA license are the student membership, but they are aspiring to become CPAs. And the AICPA, besides the Securities and Exchange Commission, is a key organization in regulating the profession, especially as it pertains to non-public companies. What does the AICPA do? The AICPA sets auditing standards. They set accounting and review standards. They're engaged in research and development as it relates to the accounting profession. Guess what? They set the CPA exam and they also grade the CPA exam. So, the AICPA. CPAs are licensed in the states in which they practice, but significant influence is exerted by the professional organization, the AICPA. Membership in the AICPA is restricted to CPA, CPA's membership is voluntary, so not all CPAs are members, but it is the largest professional association of CPAs in the United States. The CPA sets standards and rules that all members and other practicing CPA must follow in 4 major areas: auditing standards, compilation and review standards. We talk about compilations and reviews in chapter 25, which is probably about 2 weeks from today. And other attestation standard, we'll talk about that also in chapter 25. They also established the Code of Professional Conduct, which we'll talk about in chapter 4. How should CPA conduct themselves? What are acceptable, appropriate conduct from a CPA? What are some of the standards and rules of the established? The AICPA, or the Auditing Standards Board of the AICPA, issue auditing standards called Statement or Auditing Standards. Most of these statements are adopted by the SEC, and these statements govern all non-public companies. So although the AICPA does not have a direct control over the public companies, they do have an indirect control through the SEC, because a lot of what the AICPA does, the SEC adopted. The Accounting and Review Services use statement on standards for accounting and review services, SSARS. We'll talk about SSARS in chapter 25 that apply to preparation of compilation and review services. They also issue the statement of standards for attestation engagement, which we'll talk about in chapter 25. And they also have issued the Code of Professional Conduct, which we'll talk about in chapter 4. Other AICPA functions: they write and grade the CPA exam. They support research. They publish the Journal of Accountancy, the codification of statements on auditing standards, and the Code of Professional Conduct. International auditing standards and their relation to U.S. auditing standards. We're not going to talk a lot about international standards. However, if you plan on, upon graduation, to go work outside of the United States, you may probably want to read through this in detail. But most of our students generally plan on staying here. So we're not going to focus a lot on it. But I'm going to go through it very quickly. International standards on auditing, or what they call the ISAs, are issued by the International Auditing and Assurance Standard Board, IAASB, and the International Federation of Accountants, IFAC. IFAC is a worldwide organization of accountancy profession. Like the AICPA is an organization in the United States, the IFAC is a bigger umbrella, is a worldwide. Now, many people are of the opinion that the US accounting standards came about from the international standards. And I don't want to believe that. I think it's the reverse. I think the international standards came about from the US standard. Why do I think that? Well, because that's how I saw it working. When it comes to accounting, the US, United States of America, have a more complex operation than any part of the world. And most of the large foreign companies have operation in the United States. So they have to file with the SEC. So their statement have to be converted to US standards. When I used to do consulting in accounting, I was doing consulting to KPMG and some of the big four accounting firms. And one of the assignments I was doing was for US companies that had operation in Canada, Singapore, Hong Kong, Sierra Leone, and a couple other places. And that company was audited by the Big Four in those cities. I was a consultant to the Big Four to convert their financial statement into US standard because the company had to file with the SEC in the United States. So I periodically would talk to some of the most powerful attorneys in New York and also the chief accountants for the SEC. And giving my review from where I was sitting then, I come to the conclusion that the other countries follow our standards. And whenever the US propose an accounting standards, you see the ISA follow up on it later on as an international standard. I think in two areas, the United States drives the world. One is in accounting, and the other is in the legal environment, because we have more litigation in the United States than in any part of the world. So if you're an attorney or you're an accountant in the United States, you have to know your stuff. If you get a CPA, it's recognized in most parts of the world. I don't know of any parts of the world that do not recognize it. But if you have a CA, a chartered accountant, and you come to the United States, guess what? You have to go back and get your CPA to practice in the United States of America. Why is that so? Because our standards are much more complex than what you study. In most countries, you could become a CA without getting a bachelor's degree. Not the United States, you cannot become a CPA unless you get a bachelor's degree or the equivalent, and even more. So the IFAC is a worldwide organization of accounting professionals. The IAASB works to improve uniformity in accounting practices throughout the world. And you could continue to read on what they do, but we're not going to focus too much on them. We're going to move on to, what's our next topic? PCAOB standards. Sorry, AICPA auditing standards. Auditing standards for private companies and other entities in the United States are established by the Auditing Standard Board, the ASB of the AICPA. The standards are called SASs, Statement of Auditing Standards. They're also referred to as GAS, Generally Accepted Auditing Standards. And there are 10 standards that form Generally Accepted Auditing Standards. The 10 standards are broken up into 3 categories. The first one is called the General Standards. The General Standards, the first one is competent, the second one is independence, and the third one is due professional care. They dealt with the qualities of the person who is doing the audit. That person must be competent, that person must be independent, and that person must perform their work with due professional care. The second category of standards are called the standards of field work. And the standard of field work call for proper planning and supervision, an understanding of internal control, and gathering of sufficient competent evidence. And the third group of standards are called the standard of reporting. And the standard of reporting says, 1, the financial statement must be prepared in accordance with GAAP, Generally Accepted Accounting Principles, which are the rules for preparation of financial statement. The second standard in that category deals with the consistency in applying GAAP from one year to the next. The third standard deals with adequate disclosure, and the fourth standard requires the expression of an opinion. Prior to the passage of the Sarbanes-Oxley Act, the ASB established auditing standards for private and public companies. Now the PCAOB has the responsibility for auditing standards for public companies and broker-dealers registered with the SEC. PCAOB, what are these standards? Initially, the PCAOB adopted existing auditing standards that were promoted by the ICPA. They also considered international standards when developing new standards. The PCAOB standard applied only to the audit of U.S. public companies and broker and dealers registered with the SEC. Figure 2.1 on page, what page is that? On page 33 in your textbook. Shows the relationship among international auditing standards, AICP auditing standards, and PCAOB auditing standards. And this is figure 2.1. International standards of auditing applicable to entities outside of the United States. AICPA auditing standard applicable to private entities in the United States, and PCAOB auditing standard applies to U.S. public companies and other SEC registrants, including broker-dealer. Now, what do you mean by other SEC registrant? If you're a foreign company, if you're a company in some other countries, but you're trading your stock in the stock exchange, you have to be registered with the SEC. Use of U.S. standard as a basis for further study. Organization of the U.S. standard. If you turn to page 35, figure 2.2, the ASB issue a preface to the codification of auditing standards containing the principle underlining an audit in accordance with generally accepted auditing standard, which they call the principles. In that diagram, figure 2.2, the principles underlying the audit is broken up into 4 parts. The purpose of the audit. The purpose of the audit is to provide an opinion on the financial statement. So you want to obtain reasonable assurance about whether the financial statements are, as a whole, are free of material misstatement, whether due to fraud or error. Reasonable assurance, that's the key word. Material misstatement is another key word. What do we mean by reasonable assurance? Reasonable assurance do not mean that we guarantee. What it means is that based on our audit, we have reason to believe, and we do believe, that the financial statement is free of material misstatement. Not accurate, not correct, but material misstatement. What do we mean by material misstatement? It means that there could be errors, but the errors are inconsequential. For something to be material, it must have the ability to influence the user decision. So when we say that it's free of material misstatement, it is free of those misstatements that will influence the user decision. 2, report on the financial statement and communicate as required by GAAP in accordance with the auditing findings. The principles are not requirement and do not carry authority, but they provide structure for codification. The structure is organized around the following principles. And you can see the diagram on page 35, break it up. The purpose of the audit, the responsibility section, possess appropriate competence and capability, comply with ethical requirements, maintain professional skepticism. The responsibility section deal with the qualities of the auditors, or in the old rules, they call it the general standards that I mentioned. Performance deal with action to be performed. And if you look at table figure 2.2, obtain reasonable assurance about whether the financial statements are free of material misstatement, plan, work, and supervise the system, determine and apply materiality level, identify and assess risk of material misstatement, and obtain sufficient appropriate evidence. And lastly, reporting. Express opinion on financial statement in a written report, whether financial statements are presented fairly with, with financial reporting framework. So this is your figure 2.2 that's in your textbook. Organization of U.S. auditing standard continue. The purpose, the responsibility. Responsibility, the auditor responsibility stress the importance of the qualities that the auditor should possess. Competence and capability, comply with ethical requirements, maintain professional skepticism. Performance, adequate planning and supervision, determine the apply materiality level, same but coming directly out of figure 2.2, assess risk and material misstatement, and sufficient appropriate evidence. Principles versus auditing standards. You could just read through that area. The principles underlining auditing standards are general. The standards, the SASSA, CPAS, and PCOB provide specific guidance. So the principles develop the overall framework, but the standards provide specific guidance. And classification of auditing standards, they classify as SASs, or codification of auditing standards. Quality control standards and practices within the accounting profession. I go back to my earlier example of a restaurant. Your restaurant, and you're preparing food to serve to your customers. The meal is a tangible object, and your quality control standard will be tasting what you're cooking. Anybody cook in my class? Nobody cooks?
Yes.
Yes.
When you cook, right, whatever you're cooking, before you turn your stove off, what you do? You taste it, right? To make sure that it tastes good. That's your quality control standard. When I'm cooking, if I'm cooking curry, at every stage of the process, I will taste it. When I start it and I put in my oil and my garlic and my masala and all of that, and let's say I'm cooking curry chicken and I put in my curry chicken and I put in a little pepper, and I will kind of taste the sauce to make sure that the ingredients are correct. And then as it cooks, I'm going to taste it again and again to make sure that the meat is boiled, that the ingredients are okay. And before I turn my stove on, I'll give it a final taste. And then I may ask my wife to taste it to make sure this has all the proper ingredients. That's my quality control standards. If I have a party and I invite 500 people, I want to make sure I cook the best curry because they're all going to ask who's cooking it, who cooked it. And if it's bad, I don't want to say it's me, right? So then I'm going to want to have more opinion, not just mine, because I may like it, but somebody else may not. So in the accounting profession, the same way, we want to get some feedback. If this service we are providing is up to our quality. You guys are all students and you're taking different classes. And somewhere in the semester, towards the end of the semester, they're going to ask you to evaluate the faculty. That evaluation is to give the faculty some feedback of how the course, how you receive their course, but also to give the administration some feedback of how well the faculty is doing. Is this the faculty we should keep? Should we not keep them? Etc. Right? So your evaluation is one part of the quality control standards. There are other parts. We'll have another faculty observe the faculty while he or she is teaching. And we may have the chair evaluate the faculty, but we have a few evaluations that come together to form the quality of that person's output. As a faculty, teaching my class, teaching Accounting 335, and I have 2 sections of this class. My mission with my students is to put out the best product possible. I want my student to enjoy my class. Now, I don't know how enjoyable it is on this type of forum, on this type of media, but I enjoy best being in the classroom and interact with you guys. Unfortunately, we can't do that these days because of COVID. But hopefully back in the fall, we'll be back in the classroom. And I take a lot of pride in what I do as a faculty member and as a teacher. I want to make a difference in each and every one of my student life in some way, shape, or form, a positive difference. So, like teaching, we're giving an intangible, we're putting out an intangible, and we have to evaluate the quality of that intangible. CPAs, we are putting out the service, and we want to evaluate the quality of that service. And that's why we have quality control standards. Quality control standards are developed by CPA firms themselves. And they will vary among firms. The large firms will have different quality control standards than the small firms. If a firm is doing a lot of audits, they will have different quality control standards than a firm that's doing a lot of tax work. So quality control standards will vary among firms. Here we can talk in table 2.3 about the 6 elements of quality control. Leadership and responsibility, relevant ethical requirement, acceptance and continuations of client. Not every client that walks in your door you're going to accept. Not every client you're going to continue. Human resources policy. You'll see that the big 4 accounting firm, they want to hire the best and the brightest, right? Because they want the best accountants to be working for them. So they will pay you top wages to go to their organization. Engagement performances. And in any evaluation, we want to monitor it to see that the system is working as prescribed. Peer review. Peer review is part of the firm quality control standards. In a peer review, one firm is reviewing the work of another. It's like having one of your fellow students reviewing your homework, right? They're reviewing your work to see that if the quality is good, is it accurate, is it correct, is there any errors? Likewise, one CPA firm will come in and review the work of another CPA firm to help them improve their standards. Now, if you're doing top quality work, peer review will not benefit you much. But if you're doing poor work, peer review will point out the areas where you could improve your work and how you could improve your work. Now, if you're doing SEC work and you're a member of the PCAOB, you're required to have a mandatory peer review every 3 years. Now the AICPA is moving in a similar direction. The states are moving in similar directions. If you're practicing in Florida State and you're doing financial statement, you have to have a peer review every 3 years. Your firm has to have a peer review. The AICPA established audit quality centers to improve audit practice quality. The Center for Audit Quality, CAQ, is a public policy organization affiliated with the AICPA. The Private Company Practice Section, PCPS provide practice management information to firms of all size. Relationship among auditing standard, quality control standards, and peer review. The quality control standards are set by the firms themselves to make sure that we are putting out good quality work. The auditing standards are applicable to audits only, whereas the quality control standards is applicable to all work that the firm does. The Audit Practice and Quality Center are just looking at basically audit work and the quality of your other practice. So they're looking at both auditing and non-auditing work. The peer review are looking at your auditing standards, your audit practice and quality center, and also your quality control standards. So the peer review looks at all three. What are some of the factors that are present to make sure that CPA conduct themselves appropriately? One, there's the auditing standards. Two, there's the continuing education. Each CPA must maintain 40 hours of continuing education every year. Three, there's legal liability. You could be sued for whatever you own. Then we have the AICPA Practice and Quality Center. We have the Code of Professional Conduct. We have the PCAOB and SEC that govern public firms that do public company work. We have the peer review where one CPA firm will examine the work of another CPA firm. We have quality control standards that are set by the firms themselves to improve their quality. And we have the CPA examination. The CPA examination tests your competence on the date you take that exam. And this will conclude our lecture on chapter 2. Any questions so far? By the way, while I'm lecturing, if you have a question, feel free to stop me and ask.
Okay, Professor. So for the CPA exam, right?
Sorry, I can't hear you. Can you let me put my volume up? Hold on. No, that's not my volume. Yeah, my volume is up. Okay, go ahead.
Can you hear me now?
Yes.
Okay, so I was saying for the CPA exam, right? When does the 18 months start? Does it start on the day that you take the exam or on the day that you get the result?
Starts on the day that you pass the first part of the exam. Now, I'm not sure if that's the date of the exam or the date of I think it should be the date of your results. But if you go to either Becker or any one of the CPA review courses site, I think they have that detail spelled out there. I'm not 100% sure if it's the date of the exam or the date of your results, to be honest with you. I don't want to answer your question incorrectly.
Professor?
Go ahead.
Yes, Professor, I have a question for our assignment and all that. So I just bought the course, My Lab Accounting. And for the assignment, we have one assignment due on February 16.
That's for the lab. The lab is not due yet.
Yeah, that's for the lab, right? Yeah, and the
None
assignment.
of the lab assignments are due yet. The lab assignment will be due in March. I haven't even assigned the lab assignment yet.
Okay, that's why once I entered to my course, in the assignment section, there is nothing.
There's nothing due, there's nothing assigned yet.
Yeah.
As I mentioned on Tuesday, I will assign that this weekend.
Okay, so right now we don't have anything due in February 16 because you did not post anything yet, right?
No, nothing on the lab is due in February.
Okay, thank you, Professor. That's the thing I was asking.
Any other questions? Well, if no more questions, you guys go and enjoy the freezing cold out there. I will step out with my granddaughter and enjoy this warm environment. Have a wonderful day. Okay?
Thank you.
Professor, you sound just like one of my friends lives in Florida, and like we're part of a group or whatever, and all of us live up here, and like he'll always start like saying, "Oh, it's so cold now. I had to start, like, I can't wear shorts anymore, and it's like 70 degrees or something." You just start. That's what you remind me of.
That's our biggest complaint. You cannot wear short pants and be outside, or you can't be by the pool. As opposed to you guys on a day like today, it might be warming up to 32 or something.
Yeah. All right. Enjoy the rest of your day, man. All right.
All right. You guys enjoy your day, and it is a pleasure teaching you all. Take care.